Hello, everyone. Welcome. We've just opened up the waiting room, so we will start our webinar in just a moment. So please get settled. I can see there's still more people popping in, so we'll just wait a moment here before we start today's webinar. Well, again, hello, everyone, and welcome. Bonjour tout le monde. I am very excited to welcome all of you to today's webinar, Impact Investing in Housing. We have heard loud and clear from communities from coast to coast to coast that affordable housing is a paramount issue in all of our communities. So we're pleased to host the space today for this discussion alongside a wonderful panel of speakers that are going to share their knowledge, their expertise, and their wisdom with each of us. And I see some very familiar names here, and many of you are very familiar with myself. We've met previously, but for those of you that I have not met as of yet, I'm very honored to have you join us today. My name is Tracy Vavrick, and I'm a member of the Community Foundations of Canada team. And again, it is my absolute pleasure to welcome each of you to today's discussion. Please do take a moment to introduce yourself in the chat. You'll see there's an opportunity to introduce your name, your organization, and the community that you are residing in today. And I share with you that I'm joining you from my home in Calgary, Alberta. And I acknowledge and pay tribute to the traditional territories of the peoples of Treaty 7, which include the Blackfoot Confederacy, the Tsuut'ina First Nation, and the Stoney Nakoda, as well as the Métis Nation of Alberta. I have a little story to share with you, and it's about attending an event about November of 2023. And this event allowed for me to expand my reflections and learnings on ways that I can continue to strengthen my actions for reconciliation. I was asked to consider, how can I challenge the systems that create the need for resilience, and that there is definitely a difference between inclusion and belongingness? It was also shared with me that it takes a braid of women to create belonging. And I hold space for these thoughts, and how can I continue to strengthen the braids that I'm part of? And how can I continue to be part of the healing journey and actively build an inclusive and caring future of peace, of friendship, but also of understanding? So please take a moment to consider your own connection to the land of the original caretakers of where you live or where you're joining us today. And I share with each of you that I appreciate your commitment to exploring ways to strengthen your foundation, your organization, or the community that you are serving. Before we go into today's webinar, I'd just like to review a few housekeeping details with you. So just a friendly Zoom reminder, we are in meeting mode, and this does allow for some dialogue. So we do request that you mute your microphone during the presentations and through the discussions today. And there will be opportunities for question and answers as well later on through today's webinar. So if you do have questions, though, as our panelists are sharing their details with you today in their presentation, please do not hesitate to pop them into the chat box. We'll be incorporating and collecting those questions that you do post in the Q&A, and we'll have a Q&A at the end of today's session. And in regards to today's session and a Q&A, we are mindful that today's session will go a little longer. As you'll see, we have a large and diverse panel, and we are allowing for an additional 15 minutes at the end of today's session. And this will allow for us to entertain those questions, to have some more dialogue with our presenters. But if you do need to pop off, please feel free to do so at 2 p.m. We will not have our French interpretation following 2 p.m. as well. And I will come on just before 2 to offer a friendly reminder of that. This session is available in 2 languages, in English and in French, and to access the French and the English interpretation, you'll see a globe at the bottom of your screen. So if you click on that globe, you can switch between French and English. You will also be able to access the slide deck in both English and in French. And at the very top of the screen, you'll see the bar that says View Options. If you click on the arrow beside it, a panel will appear. Under the shared screens at the very bottom of that panel, you'll be able to choose to view either the English slides or the French slide decks. Now, I'm very excited to go into today's session and to introduce to you our wonderful presenters. We are joined with MJ Sinha, who will be moderating today's discussion. Now, MJ is a responsible and impact investment consultant with extensive experience volunteering and working for nonprofits, foundations, and family offices throughout Canada and abroad. Today, we're also joined by Michael Maidment, and Michael is the CEO of the Ottawa Community Foundation and has done significant work in the areas of policy development and government relations throughout his career. We also have Lindsay Harris joining us, and Lindsay is a community developer and a co-founder and president of Propolis, which is a housing corporation. And we're very excited to hear from Lindsay today as well. Next, we have Timothy Kent, and Tim is a co-founder and CEO of Redwood Park Communities and is a prolific visionary and serial problem solver. Welcome as well to Tim. And joining us as well is Nicholas Van Diervid, and Nick is the finance manager with Indwell, a Hamilton-based charity that develops housing and currently operates 1,200 affordable housing units. And lastly, we are also joined by Mike Bulthouse, and Mike is the executive director of the Ottawa Community Land Trust. I am absolutely honored to have each of you join us today. So on behalf of Community Foundations of Canada and each of our attendees today, thank you to all of our presenters for stepping in to join us for today's discussion. I'm absolutely honored now to turn today's discussion over to you, MJ. Welcome.
Thanks, Tracy. And thanks to all the speakers today who are joining us, and thanks to all of you in the audience for taking all the time. I see good close to 80 people excited about this session today. So just to give a quick, we chatted about who the speakers are. We're going to have talk a bit about this community bond in less than a minute, the role they're playing. We'll have Mike chat about the perspective of a foundation and asset owner. And then we're going to have some short but very impactful presentation from our speakers who have different community bonds from coast to coast to coast across Canada. And I have back pocket questions, but the idea here is to hear what the audience wants to hear. Foundations, nonprofits, individuals in the room, what questions there are. So please put them in the chat, and we'll be monitoring it, and we'll be addressing that at the later part of the conversation. So with that, maybe I'll quickly start about what are community bonds and what role are they playing. So the technical definition, and I'm picking this up from Tapestry Capital's website, is it's a social finance tool that's being used by charities, nonprofits to finance socially and environmentally impactful projects. So think of it similar as a traditional bond. You buy it for a 5-year period, you have a recurring interest rate that you generate, and instead of and the work that it finances is an affordable housing in your community, or clean energy projects and things like that. So think of it as a traditional bond, but something that is also creating an impact in your community. Now, through a lot of my work, I've seen how these community bonds have helped, again, from coast to coast to coast, for communities across Canada raise capital from those communities and build for the community. But I'm not going to talk much about it. We have some great speakers here, so I want to listen to them and what they want to see, what they want to talk about. So with that, I'll start maybe first with that context set. Start with Michael from the Ottawa Community Foundation. I would love to hear from you about how is your community foundation supporting the creation and preservation of affordable housing through your investments? And given that there are a lot of folks here from the foundation space, could you also share how does it fit in your investment portfolio as well as your social impact focus. So, what work you're doing on affordable housing and how does a community bond fit in? And thank you for joining us today.
No problem. I'm probably the newest leader in the Community Foundation movement across Canada. So that's a disclaimer. So if I mess up, MJ, it's because I'm new and I'm going to hang on to that for a while. So
all good.
I think there are a number of different ways that community foundations can support the creation and preservation of affordable housing. But I just wanted to say, specifically, there's a lot of things to consider. I mean, we have a broad range of issues that, community foundations seek to support. And I think, alignment between the foundation's priorities and its investment is, a critical item to get right. And just thinking about affordable housing specifically today, I think it's also important to say that affordable housing is such a core issue and that it's connected to many other issues in the community, as we know, such as food insecurity, poverty, mental health, stress, anxiety, education outcomes, overall wellness. And if we solve the affordable housing crisis, we'll impact many other issues across the spectrum in our community. But I think there are three ways that we can support here, and investing in affordable housing within the foundation's investment portfolio through an impact investment or a community bond. I think that is, one of the key ways, and what we're talking about today. For those of you that don't know, community foundations oversee an investment of endowed funds. So we have the ability to make choices within that investment portfolio and make investments that specifically impact affordable housing. Currently within our mix, the Ottawa Community Foundation's mix, we're invested in impact investing in about 18.3% of our total assets, or excuse me, 11.3% of our total assets are currently invested in impact investing. And one of the things that we're thinking about as a foundation is seeking more local impact. So we know that we can make specific impact investments, but those impacts might not be felt in our local community. So one of the things that we're thinking about certainly is making investments that have a local impact right here in Ottawa. One of the things I think that we think about in community foundations, there's sort of a natural tension between investment, when you make investment decisions, around return versus impact. And so, earning higher returns so that we can grant more funds, or investing in impact investments that have an impact. So I think it's important to think about measuring the real impact of an impact investment, not just the return on that investment, but the impact that the organization or initiative you're investing in is generating on the ground, and help to build that measure into the analysis, because ultimately, I think that is part of the calculation that foundations are making when you're looking for a return. I think the second thing is providing direct funding to organizations working within the affordable housing space. And, oftentimes we don't think about the core operations of an organization, and they need funds to operate effectively. So investing in capacity, investing in core operations. We've granted as an organization about $8.2 million to organizations working in the housing sector, and that includes the Ottawa Community Land Trust, and another organization locally called the Ottawa Alliance to End Homelessness. So I think that's important to think about, when we're talking about investing in the core operations of those organizations. And then I think in a third way, I think community foundations have a role of informing and inspiring donors. We play a matchmaker role, if you will, with our donors, and sort of, matching our donors to these key issues that are happening in the community. So we have to play that role in informing and inspiring our donors to support issues such as affordable housing. There are some other great examples across the country. One that comes to mind is the London Community Foundation, which created an affordable housing fund. So they funded that fund and then used the funds to support organizations doing work in the community. I also think about raising community funds to partner in large projects so that we can participate in partnership with municipal, provincial, and federal funding. So again, being that conduit in the community that can raise funds to help participate in some of those significant projects. So I will pause there, MJ, and
Thanks, Michael.
Ask for your back pocket questions, I guess.
Yeah, I think this was a great starting point before we move to the presentations about the investment, the granting. So just a reminder to those in the group, right? Like you can reach out to your local foundation and explore opportunity for both granting and capital. And then, of course, you said that conduit between the community. I will put a side note, given my role as an investor in the past, is when investors are thinking of something like a community bond, what would you use to benchmark, right? Like when you're benchmarking returns, are you benchmarking with public markets, stock markets? Are you benchmarking private equity, or are you benchmarking with government bonds? And those kind of thing can help taking a portfolio approach and thinking of right benchmarks. But as I'll try my best not to add a lot of comments, so I will like to move to the amazing speakers that we have from across Canada who are going to talk to us about their organization. So what does your organization do? Why is it considering community bond capital raise, challenges and opportunities, and one ask? So no pressure, not too much to ask. So with that, I will pass it to Lindsay from Propolis. And Lindsay, this floor is yours. Would love to learn about your work, and then we'll follow the order that we had discussed. Thank you again for joining us.
Thanks so much for having me, and what a great audience to speak to today. I would like to start off by acknowledging that I'm joining the meeting today from the unceded territory of the Secwepemc peoples, based here in Kamloops, BC. And this land is called Secwepemcúlecw, and we're honored that the work that we're doing at Propolis is one of the ways that we are trying to be good guests on this land. So I am delighted to talk to you today about the project that we have underway, and this is the very short summary for you. Propolis right now is in the process of raising $1.1 million in community bonds to build Kamloops' first ever net zero affordable housing development. It'll have 50 residential units as well as commercial space on the ground floor. It'll be based here in Kamloops. And as of earlier this month, we're approaching $700,000 in bond purchases and pledges towards our goal. So we are getting very, very close to purchasing our first property with this target. And so it's a really exciting time for me to be talking to you about our work. Let me tell you a little bit about Propolis. For those who aren't familiar with the concept of bee propolis, it's the resinous substance that bees use. They harvest and they use it to fill the cracks in their hive. And our team at Propolis is very inspired by this nature metaphor and inspired in our goal to build a community where nobody falls through the cracks. So we are a brand new nonprofit housing cooperative organization, and our mandate is to develop affordable, sustainable, net zero homes in Kamloops. And we have the goal to be building housing over the next several decades here in our community. We want to grow ourselves into an organization that has the capacity to develop housing and contribute to solving the housing crisis over the long term. So we're a group of grassroots volunteers. I would call us citizen developers who have come to this work because we were looking at the housing crisis that we were facing in our community, just like so many communities across the country are facing. And we were realizing that cooperative housing is such an excellent tool to ensure affordability over the long term, to build thriving communities and neighborhoods. And it was a really underutilized tool. There's no other group in our community that's trying to develop cooperative housing. And it's also a really important tool in terms of the housing continuum. We need all kinds of diverse housing options for people in order to solve the housing problem that we're facing. We're also looking at the climate crisis that our community was facing and noticing that Kamloops has been significantly impacted by wildfires and flooding in our region over the last several years. In particular, it seems to be increasing in intensity. And we have a lot of evacuees from the region that are coming into our community. Our population is growing really rapidly. And so we wanted to be looking at how affordability and sustainability can work hand in hand to help us to solve the problem. So our development work at Propolis is led by myself. I have a background in community economic development and community food security. And like Michael just mentioned, all of the ways that affordable housing is interconnected with so many of the social issues that we're facing. It's really helpful to be able to work on affordable housing in this interconnected way. And my co-lead on the project is Miles Pruden, who's the owner of Nextbuild Construction, which is a local firm that's a leader in affordable and sustainable building techniques. So what are we building? By 2026, we hope to have constructed a 6-story apartment building that will have 50 affordable residential units that will range in size from bachelors to 3-bedroom units in the heart of Kamloops North Shore. And all of the residential units will be net zero and incorporate universal design. The building will use a number of construction techniques to help us achieve that net zero goal. And this is co-op housing, which is suitable for such a diverse range of people in our community. It's suitable for working families who are priced out of the housing market, young professionals like graduates from our local university who are, just starting out and can't afford to get housing here. Suitable for retirees and students. We know that co-op communities, when they're diverse, are really strong, and we're excited to be able to bring this to the neighborhood. For those of you who aren't familiar with the co-op housing model, nonprofit housing cooperatives are owned and operated democratically by their members. Members purchase a moderately priced membership share. They pay a monthly housing fee and they enjoy secure long-term tenancy. For Propolis, our target is to have our monthly housing fee be priced at 80% of median market rents for Kamloops. So how are we going to finance this? We're at the stage of being ready to purchase our first property. And so the $1.1 million that we're raising is to enable us to do that. And we're using community bonds as an incredible innovative tool to allow us to do that. So you can see on the slide what the Propolis bond terms look like. We have a worker bee bond that you can purchase with an investment minimum of $1,000, earn 2.5% interest over a 3-year term. We really wanted to set our investment minimum at a very accessible rate so that really anyone in our community who's in a position to invest even a little bit is able to contribute to this project. We also have our Queen Bee bond, which has an investment minimum of $5,000 and a 3% interest rate. And our APRA investment starts at a $10,000 minimum and earns 3.5% interest over 3 years. So I'll keep my comments short and wrap it up there, but just so grateful to be able to be talking to an audience of people who are committed to making an impact in your communities. And we're really excited at Propolis to be one of the organizations that's leading the way on trying out community bonds for affordable housing and inviting you all to invest and help us make an impact in our community.
Thank you so much, Lindsay. That was amazing. So what would be helpful is I have questions for later, but what would be helpful is if you can put in chat, the details if someone wants to invest in this, and this applies to all the speakers, but I'll keep reminding anyone who wants to invest, or a foundation who wants to talk about, or a community organization that wants to learn more. If you're open to chatting and some details about your organization, that would be great. So with that, I'll thank you again, Lindsay. Could we have you join us now and share about your work at Redwood Community Parks, and what are you folks doing related to impact to community bonds and housing?
Yes, thank you, MJ. It's an honor to be here, and thank you for having us and being part of this important conversation. Really appreciated what Michael had to say and what the group from Propolis had to say. In fact, we started a lot like Propolis did a few years ago, and so I can relate to that sort of grassroots and the work that it takes to get something off the ground. So I really appreciate what you're doing over there. I'm with Redwood Park Communities, and we are releasing Redwood Community Housing Bonds. And if you can go to the next slide, I'll just kind of tell you a little bit about Redwood, but we started in 2009, and we were able to secure our first property using traditional financing methods, private lenders and vendor take back, and completely were able to renovate it completely and start to offer supportive housing in our community. And we started with 5 units, and it's grown from there. We have several places now that we operate, all supportive community. We also have a few social enterprises that we operate, because for us, the opposite of homelessness isn't having a home, it's having a community. And we recognize that if people were supported with each other and connected with each other and had a sense of community in place, if they did run into a difficult situation and lost their home for some reason, they would actually not be without a place to stay. And so we recognize that as something early on that we wanted to do more with. And so all of the units that we create are in supportive community, and we work really hard to foster this sense of collective belonging for people. With our housing units, like last year, we were able to house 85 people. We currently have 21 new units that are under construction, 24 people with barriers to employment that are employed, and also in some trades training and getting educated there, and then being able to go on to jobs in the construction industry. And we've been able to foster all of that work with what we're doing. And so what we're really doing is having some major impact in the community, not just around housing. Michael said it at the beginning, that housing and that core need of housing, if people don't have that, then lots of other social issues happen and have a negative impact. And so the housing, we believe, is kind of the first step in that journey towards strengthening community and fostering a place where we all want to be able to live and enjoy. If you could go to the next slide, I appreciate that. In terms of what Redwood Park Communities is doing, we work in the city of Barrie. We are in the county of Simcoe and have expanded across the county of Simcoe. We currently have 81 units of housing that we operate. We own 49 of those units. And as I said earlier, we have 21 units that are under construction, and we're looking to grow and do more of what we're doing, because the way that we're approaching housing is really working in our community. It is helping those that are most vulnerable and getting people permanently and supportively housed. And many of our residents have been able to go back to school. They've started businesses, they've gotten jobs and are working, and it's just having a tremendous impact. So we want to be able to do more of it, and do more of it on a much larger scale. Our community is in need. We waffled back and forth in the community between being the 3rd highest area for rental and the 5th highest across Canada. And we're just a pretty small town, like we're 160,000 population, and we're up there in terms of rent amounts, with cities like Vancouver and Toronto. So we don't have the same kind of economic abilities that some of the larger cities have, and opportunities for employment that some of the larger city has, but that is growing. But it is putting a tremendous amount of pressure on our housing market, and our homelessness in our community has grown exponentially in the last 2 or 3 years, especially with the pandemic happening. And I think that most of you, whether you're from the East Coast or the West Coast and everywhere in between, you're experiencing the same things that are happening in your own community. And so we have a real need for housing in this country, and Redwood is focused on the need for that housing in our regional area of Simcoe County. If you could go to the next slide, appreciate that. I'm not reading the slides for you. I'm assuming that some of you are able to kind of read them as we go along and get some of the information off of there. The project that that we are working on, that we are doing community housing bonds for, is it's a new project. It's a partnership with a local church. We are going to be taking over the land that the church is on. It's about 3 acres. The church is going to lease their space back from us, and we are going to build 2 5-story buildings with 96 residential units. And the ground floor of the one building is going to be a Montessori school, and the ground floor of the second building is going to have a fresh food market, and it's also going to have a commercial kitchen that is a social enterprise that will be taking food, recovering food that might be on the verge of not being on grocery shelves anymore. And we will be creating employment for individuals with barriers to employment with that program, and we will be providing pre-packaged or pre-made meals for the Montessori school and the residents and other community members and residents that need lower cost prepared foods. And so there's a lot going on with the project that we are doing. But the first step is to get it built, and so we are going to be relying on community bonds to get things started, to close the deal that we have with the church, to then get through the planning stages and permit ready, and then move into the construction phase. Our intention for this project is to raise $10 million. You can move to the next slide there, please. We have a anticipated timeline there. We're hoping that we will be able to have this project completed with people moved in by the spring of 2027. And we have 4 series that are available for investors, ranging from the 3% interest return to a 4.5% interest return, depending on how long the bond period is going to be for and the minimum investment amount. And the bonds will be a registered product, so they'll be RSP and TFSA eligible as well. And so that creates a lot of opportunity for individuals, not just foundations and institutional investors or larger investors, private investors, but also just everybody that lives in our community is going to be available to them to be able to invest in this project. We have about $164 million that go into RSPs in our city and area every year. And even if people started to think a little bit differently about what that could look like for them to invest in something that had impact right here in their community, instead of sending it off to a large mutual fund company where it gets invested all around the world in various ways. They, if they just invested even 2% of their RSP that they would make in their contribution each year, we would raise $3 or $4 million. So smaller investors can have a massive impact as well. It's not just about foundations, and it brings the whole community together, involved in solving some of the critical social challenges that the community faces, and we can solve it together. Next slide, please. I think next slide is just how you can get a hold of us if you're interested, and what that could look like. So I don't know if you want to leave that up there for a minute, if you would like me to put that information in the chat.
Thank you so much, Tim. Just in the interest of time, I think you can put it in the chat, and this was great. So thank you for presenting, and also a great reminder for folks that a lot of these instruments are eligible for your RSP as Tim mentioned. So keeping that in mind. But Tim, if you could put the details about the organization in the chat and how people could get in touch and the investment opportunity, that would be great. Thank you so much for joining. With that, could we have Nicholas from Indwell join us and share about your work and how community bonds are playing a role? And if you could try to keep this into 4 to 5 minutes, because I'm seeing we're getting some questions, so I'll try to keep about 15 minutes at the end for Q&A. So Nick, the floor is yours, and thank you so much for joining us.
Yeah, wonderful. Thank you so much for having me. Happy Tuesday. I am super excited about talking about deeply affordable supportive housing and how we can meet at the intersection of impact investing to bring more homes to the communities that we care for. My name is Nick Vannevelde. I'm a finance manager at Indwell. Indwell is a Hamilton-based organization with a vision of bringing hope and homes for all to the communities that we are in, and hopefully many more communities in the future. We predominantly operate in southern and southwestern Ontario. I want to talk to you about homelessness for a second. So our focus is on the most vulnerable and excluded in community. And when we look at homelessness and homelessness trends, we believe there are three ingredients that are driving homelessness today. The first one is housing affordability. The second is mental health care when people are in crisis. And the third is the opioid addiction crisis. And these are three kind of ingredients that are really pushing many folks into places where they get trapped in very dire circumstances. We have a solution. In our minds, the solution to homelessness is supportive, affordable housing. And so deep supports from a nursing and medications perspective, a recovery perspective, a social worker perspective, a housing stability perspective, and rebuilding community and identity in a home that is yours, we believe is the solution to homelessness. So one of the questions that we get asked often is like, why are you not building more homes? And I think one of the challenges that we face on the development end, one of our kind of first big barriers is first in capital. So I'm going to move into the slides just for a second. Before I jump into the kind of the barrier that we have around development, just a quick synopsis about Indwell. So again, we bring a vision of hope and homes for all. We have about 1,200 units of supportive, affordable housing. Currently, we operate in Hamilton, Woodstock, Simcoe, London, St. Thomas, Kitchener, Cambridge, and Mississauga. We have we have exactly 124 units under construction right now that are looking to be completed between one project is due in 3 days, and then there's some other project. The other two projects are done in July. We offer a range of supports such as nursing, addiction supports, behavioral therapy, recreation, and in our enhanced programs, we provide meals, medication, and furnished apartments. As of last year, November, we have over 270 staff. And so we've seen a lot of rapid growth, both from the units that we have developed and operate to the actual staff. So coming to our problem, there are many problems when it comes to affordable housing. When it comes to the development section of it, our initial barrier really is first in capital. We require this capital to acquire and acquisition sites and to move a project through environmental, zoning, design, and the municipal approval processes. So once we have done that, we would deem a project shovel ready. It's the status that we provide to a project where we're essentially ready to move forward to engage a general contractor to develop our projects. And in our experience, what happens is that government entities like CMHC will not consider an application for funding or financing until a project is deemed shovel ready. The first hump is that first in capital that allows us to start that pre-development trajectory and getting it into a place where it is shovel ready and we can actually start that conversation with government funders, other financing entities about long-term financing. Now, once a project is shovel ready, we have a very high probability of attracting capital funding, which we've done very successfully over the last 20 years. So one of the ways that we're trying to mitigate that problem is by raising the Hope and Homes Hamilton Community Bond, which is $5 million. And it's really to get projects through pre-development, qualify them for government grants and long-term financing. So for us, and this might be a bit different from the other presenters you've seen, the community bond will be a short-term financing solution. So we will not use the community bond as a long-term financing product. And in fact, we are actually encouraged to go after and secure CMHC's co-investment funding or program. We also want to structure a community bond as a revolving loan fund. So the idea is that once we have injected capital into a project and the project is now deemed shovel ready, the long-term financing that we will apply for will take out that community bond capital. And if that's inside the term of the bond, we would redeploy that capital into the next project. This gives us a revolving fund kind of methodology that also creates more efficiency and speediness to our ability to deploy capital, acquisition of site, and move it into pre-development. So we have 3 projects. Technically, there are 4 projects that we're raising the bond for. The fourth one I can't talk about just yet because we're under a confidentiality agreement. But the 3 I can talk about are the ones on your screen. We currently own these sites. We've invested some capital in these projects already. We've engaged an architect. Some of these sites already have their approvals process done. And so the 3 projects that we're raising capital for currently are Acorn Flats in Hamilton, Stonehouse Apartments in Hamilton, and Ottawa Street Apartments. What's neat about these projects is that Acorn Flats is our first design that targets families, and so hence the number of 2 and 3 bedroom units. And then Ottawa Street Apartments is specifically focused on Indigenous tenants. And so I'm quite excited about these projects and about the work that has been put into the projects currently. So here's our bond offering. We have 5 series A to E. They range from a 3.5% to 5% interest rate with a term that starts at 3 years all the way up to 5 years. Minimum investment is $1,000, ranging to a minimum investment of $50,000. And then we are registering bond series number C to one of our assets in Hamilton. So we're going to back it as from a security perspective, which makes it eligible for bringing a registered product to invest in a community bond, so a TFSA or an RRSP. So it's the end of the slideshow. The one thing that I want to comment is that we are launching March 4th this year with our community bond. So we're still in that process of putting our kind of principal package together, the financial model, the business plan, the investor brief. I'm really excited about this prospect. And lastly, what I want to mention is that we're not new to community bonds. Before 2017, before there was a national housing strategy, there was just no access to the financing and funding tools that we have access to now. And so many years ago, we started a loan fund ourselves called the Impact Loan Program. That has grown to $29 million from 300 different individual and corporate investors. And that is really long-term financing that we've deployed on other projects prior to the national housing strategy. So we're familiar with the bond model. This community bond is more specific to Hamilton, to 4 particular projects, specific to a dollar amount, and really would serve as the formalization of our current loan fund. And so there's some experience that we have in deploying investment offering to market. We have a wonderful ecosystem of supporters, and we're really quite excited about raising capital this way. I think with that, I will pass it on. Thank you so much, NJ.
Thank you so much, Nick. So great presentation, great reminder on the capital stack. So that was a question that came up around, what you're going to use the capital for. And this is a reminder to folks in the room, again, investors and others, like, relation with your local foundation, as well as the other comment on the RSP TFS. So with that, it was great. I'll try to find time at the end for Q&A. That I'll move to Mike from Ottawa Community Land Trust. Mike, would love to learn about your work, what you folks are doing there in Ottawa, and how is community bond coming into play for you. Thank you for joining us.
Thanks very much, MJ, and thanks to those who organized the webinar for this opportunity. Really great presentations and inspiring work so far. I'm mindful of the time, so I will try to be brief, but really pleased to join you from Ottawa, acknowledging that this land is the traditional and unceded territory of the Algonquin Anishinaabe Nation. And as a land trust, when we have discussions on a daily basis about the transfer of land, this acknowledgement is something that we continue to think about and wrestle with, and I think in this immediate term calls us to be stewards of the land and the homes that are on this land. So if we move to the next slide, I want to introduce who we are as the Ottawa Community Land Trust by the problem that we are looking to address. Many of you may know, of course, all of you know that we have a housing crisis, probably in every community across this country. And while we are building new affordable housing with public subsidy and also, contributions from foundations and donors, we know that it's not keeping up. And in fact, Steve Pomeroy, who has crunched StatsCan data, has shown that here in Ottawa, over the last 10 or 12 years, we lose about 31 units of affordable housing for every new unit that is constructed. And so these are units that we're renting for less than $1,000 and are being lost to either redevelopment or, as rents, as units turn over, these rents rise because of vacancy, because of rent decontrol at vacancy. And so if we move to the next slide, we might imagine that one of the ways to kind of combat this challenge is for the community sector, nonprofits, co-ops, and other community-minded corporations and businesses to acquire these units that are quote unquote naturally occurring affordable housing. The challenge, of course, is that very few community organizations have the capital, the capacity to make these kinds of acquisitions, whether it's securing the capital in accordance with real estate timelines or ensuring the competencies and readiness is there within the organization. And so about 3 years ago, the OCLT, the Ottawa Community Land Trust, was created in part to fill this gap here in Ottawa. So if we move to the next slide, just a little bit then about who we are. We are a federally incorporated nonprofit, but wishing to work as a social enterprise, operating as a social enterprise, therefore, aspiring to an operational model where our revenue through the properties that we buy and own source our operations as well. And what we're trying to do, and Nicholas just introduced this concept in the last presentation, but is to establish a revolving loan fund that would allow us to acquire some of these modestly affordable rental housing units that could then be preserved under community ownership for today and for the future. And briefly, I'm really privileged to work with a board that spans the cooperative, the nonprofit, but also the private sector. And I think what we're looking to do is bring tools from these different experiences and expertise into this work of beginning to set up what this acquisition fund could look like. And so capitalizing this fund is really what brings us to our community bond offering. If we look on our next slide, I just wanted to briefly, I think our next slide, briefly introduce our first acquisition just as a model for the kind of work that we do. So last October, we bought a 6-unit rental property. The rents in this property were well below even CMHC's level of average market rent. So the tenants in this building were allowed to stay, and we respect those rents. We were able to buy this building through conventional mortgage. We did receive a small grant from the City of Ottawa and a philanthropic gift. But even all of that still leaves us with an equity gap, and we're looking to fill that with our community bond offering. So right now we own this property on a line of credit to be paid off once our Housing Forever bond or community bond capital comes in. We're able to envision repaying these bonds and servicing these bonds because upon turnover, we will raise the rents to a modest level of affordability. So we have 2 priorities. One is to ensure the viability of our portfolio, but also to maximize affordability as much as possible. And so while we will always retain rents at rates well below market average, we will raise rents to something a little bit more to ensure that we can service both the mortgage and the bonds on these properties. And then I think on one last slide, or maybe 2, just to introduce our bond campaign is to raise $1.6 million. We know that we have a $500,000 equity gap on the first property. And we know that if we can raise $500,000 for that, we anticipate being able to purchase 3 properties by this spring of 2024. So just to end on this next slide by introducing our bond series, we're hoping to go live likely in March this spring, late winter, early spring. And are looking to offer 3 series, again, similar to others, between 3 and 7 years with rates of return between 3.5% and 4.5%, and really targeting both, community investors, retail offerings starting at $1,000, but also really wanting to bring in businesses, organizations, the development community with a higher threshold at Series C. My contact information is there. I'll throw that into the chat as well, but really look forward to the Q&A. So thanks very much, MJ.
Thank you, Mike. Thank you. That was great. Amazing presentation as always. So maybe we'll quickly jump into Q&A. And as was mentioned by Tracy in the beginning, the session runs to 2:15, so 75 minutes, 2:15 Eastern. So we're going to start with Q&A, and Tracy will just make a comment at 2. But for now, I'm going to the chats, and the first question that had come up was about the capital stack. And I noticed that, Lindsay, you have already addressed that. But I want to give an opportunity, Lindsay, if you want to add any comments. And to others here, Mike, Nick, and Tim, do you want to flag anything from your capital stacks that might be something different or unique? So Lindsay, first to you, and then quick comments to others, under 45 seconds if you can, under a minute if you can.
I'll try to be really brief because I did write notes in the chat. I did just want to say that I think that community bonds are such a great tool for, to get a project like this kickstarted. Being able to walk into the CMHC office or other lender's office as you're assembling the capital stack, being able to show that you have the support of the community and have raised community bond funds up front is really something that, it helps to unlock other opportunities for what the capital stack could look like. So yeah, I'll leave it there.
That was amazing. That was amazing. So the stage as well as community engagement. So that was very helpful. Any comments from any of you, Nick, Mike, and Tim?
Yeah,
I can start with you. Sure.
I'll just add to that. It's Tim from Redwood. Yeah, same thing. Like the biggest roadblock for a lot of these housing developments is that money that's needed to get things moving forward and in a quick, efficient manner. And I think you've heard that loud and clear from all the groups that are represented here, that is the case. So the bonds that we're raising, our project's a $50 million project. It's not going to cost 10 million. It's going to cost 50 million. And we're expecting that a large chunk of that's going to come from the CMHC, come from the Municipal Green Fund, come from local efforts that we have around philanthropy as well. There's going to be grants and other donations that are made, and the housing bond is a piece of that kind of really gets a project kickstarted, and that's what's going to happen with us. Our plan is very similar to Indwell's, and that it is. We're looking at it as being revolving. Our intention is to raise $100 million over the next 4 years to really kickstart some big projects that we have in the pipeline. And, if you partner with us long-term, Redwood will be able to deliver repeating outcomes over and over and over, using the same investments to finish open and get it completed and put some traditional financing in where it's needed. And in particular, the security of our bonds is going to be a general security agreement across our assets. It's not going to be tied to one specific property, so that we have the flexibility to be able to get these projects off the ground and up and operating, and then flip that money to keep doing the same thing over and over. And we can do some pretty substantial projects every 2 or 3 years that are getting completed and making an impact on the community.
Thanks, Tim. Thanks. That's great. Wanted to know if Nick, you folks have anything, and I also have a question for you both. Then.
Yeah, for sure. So I'm just looking at Steve's question. When I look at the capital stack, typically we see a variety of the following segments. It's a land donation potentially from the local municipality. CMHC has a non-repayable portion based on several criteria related to the housing strategy, and then a repayable portion in the capacity to track that seed funding. As a charitable organization in Ontario, we receive an HST rebate of 0.6969%. The province comes to the table on some projects, although there's no direct funding application or stream that you can really apply for. This is one of the components we feel that is really missing, a provincial funding program for the type of housing that we want to provide. Typically, there's a municipal allocation from a reserve or a specific housing program, and then at minimum we try to raise 5% donations. There's basically like an equity component that we bring forward through fundraising and philanthropic campaigns. And the last thing that I wanted to mention, our rents are across our portfolio are the shelter portion of ODSP, or maybe a little bit above that. So on average, I would say it's about $600 a month. It doesn't matter if you're in Mississauga or in London, Ontario. So that means that we have to lean on two other various forms of operational dollars. One is rent subsidies by the local municipality or regional municipality, and the second is Ministry of Health dollars that provide an allocation for the large staff complement that we have as they provide the supportive aspects of the housing, which is really a key component to long-term sustainable housing and kind of rebuilding that identity and community. So it's very complicated. When one thing shifts, it can create some major complexities for us. But typically that's our capital stack on our projects.
Thanks, Nicholas. That was great. And also that reminder, we talked about the health part, right? Like how looking at everything and wherever, you can play around. I've been on the investor side of these things and I look at it from that perspective. So just a reminder to folks about, and you're all doing great creative work. So just keeping that creativity open. And I know some of the folks here who have always been very open to chatting with others. So, we have shared the contact details and, if you have questions. So with that, I'll reaching out to these folks. So with that, I'll move to Mike. Mike, any comments from you on the capital stacking? And are you doing anything different?
Yeah, just really briefly. I mean, I sorry for the sound there. I think really trying to prioritize, for us, the viability of a community-owned portfolio, while also wanting to maximize and deepen affordability as much as we can, but recognizing that our space is probably within that kind of missing middle or modestly affordable range. And so we've developed an acquisition policy that we continue to look at and try to refresh. But where we, are trying to find properties where the loan to value would be sort of 65 to 75%, so that conventional mortgage financing can take care of that. And then we believe through our modeling that we can service community bonds for that kind of remaining 25. The property that we did buy on Kirkwood, the loan to value is considerably less than that, and that's where the non-repayable capital comes in. So we were able to secure a grant from the city and a philanthropic gift. And so I think that stack could vary from one acquisition to another, but those are kind of the key components at a very high level.
Okay. Thank you. Thank you so much, Mike. Before I move to the next question, Tracy, do you want to, getting closer to Eastern Time, do you want to add your comments and about how session is going to proceed?
Thank you so much, MJ. And I do want to say, I did not want to disrupt this conversation. This is fascinating, absolutely fascinating. And I know I've made quite an assortment of notes, and I know that many of our guests that are with us have posted questions. They have additional questions. And I know they've also been gathering from all of the great resources and tools and the plans and everything you provided. So I'm only going to take a second. Please, I just want to flag we're at the top of the hour. So those that do need to hop off, please feel free to do so. We are going to, though, launch a quick poll. So if you can take a moment to just complete this poll before you do step off, if everyone could just pause for that, just that 30 seconds to do so would be so greatly appreciated, as this supports us as we continue to navigate and explore future conversations that are relevant for this audience that's with us today. Also, just want to wish Mike and a deep appreciation. This is Mike, not Michael. This is Mike, our interpreter. Mike, our interpreter, is just stepping off at this time. And we do appreciate, Mike, that you were able to be part of today's discussion. So MJ, I'm going to move it back to you, and I'll jump on just at the end of today's session in 15 minutes as well.
Perfect. Thank you. Thank you so much, Tracy. And thank you for those who joined and those who are sticking around. So we'll try to pack as much in the next 15 minutes. So one question, now I'm going to move to Michael, if that's okay, is ask, a question, I'm going to bring this question back to the group, others here, is about the role of community foundations. So I see one group has, one participant has asked about, the support from local foundations. Michael, could you share anything you want to add on why you folks you chatted about the context, why you're doing this, and what would be your one lesson, suggestion, recommendation to others in the room, other community foundations who want to get? So what are you doing, and what would be your one recommendation to them?
Yeah, I think, MJ, I would underline, what I started out with, right, is understanding the importance of this issue within the community and the interconnectedness of it. So when we're thinking about, if our vision as a community foundation is to make the community that we live in a better place, thinking about, what exactly are the areas that we need to focus on in order to achieve that. And so if we target these issues that are very interconnected, we know that it's going to have a ripple effect throughout the community. So we're not just touching housing, we're touching all of these other connected issues. So I think that's an important part of it. And an important reason why, us as an organization, the Ottawa Community Foundation, is very interested in this issue, because we know the downstream impact that that building more affordable housing or retaining more affordable housing in our community is going to have.
Perfect. Thank you so much, Michael. just to close this topic off, could I start with Mike and the support here? I mean, Michael is already here. The support from local foundation, and then how's that gone for you? So that's a question that was asked for pretty much all of you. Just quickly, 30 seconds. Support from local foundation, and what, if anything, and what was it?
Yeah, so I think differentiating between myself and Michael, we have a really great relationship with the Ottawa Community Foundation. Back when we, as an organization, first received some funding from CMHC to set up the OCLT, the Community Foundation was a partner with us to explore what setting up this revolving fund could look like. We had a great relationship with them through our first acquisition, and I know that as we go live with our community bonds, we've already had some early conversations about pitching to the investment committee with the OCF, and yeah, so I think we're walking an exploratory journey together, I would say, right now.
Thank you, Nicholas.
I've been with Indwell for about 3.5 years, so there's a deep legacy before me. Based on what I understand, however, is that we've worked in tandem with a variety of community foundations based on the area that we were developing. And oftentimes this was one of the only avenues that we would have to acquire a site and actually get going on the pre-development. And so it created momentum for us. I think it's safe to say that without the community foundations, we would not be able to move forward, or it would have taken a very long time to do so. So there's a role of empowerment, in my opinion, that community foundations play that could be very big in harnessing the momentum that a housing project needs to get off the ground. And I really like what Michael said earlier at the beginning of the presentation, that donors are looking for accompaniment and guidance to where to place their money, right? Or from a financial return perspective, but also from a social return perspective. And I think that's, in our experience, that community foundations have done that really well. And so we have deep privilege in working with the foundations in that space.
Thank you so much, Nicholas. And I'll add a quick note on that I've been a few hats, and one of them has been an advisor to the Hamilton Community Foundation on their impact investing. So just want that right timing and that stage and going in and supporting. So that just want to. There was a lot of questions for community foundation, so continued, and I am also involved with a bunch of foundations as a board member too. I would say just continued recommendation to the investees to chat with more folks, and to foundations to think more creatively, like Michael talked about here, about capital stacking, about impact. I'll stop my comment there, but encouragement to everyone. Lindsay, has there been a role of the local community foundation? Is there one in your context, and what's happening?
Well, I will say that because community bonds are so new for BC, there's a little bit more history of community bonds in Ontario, but for BC, very, very new. And so I do think that there is somewhat of an education process for foundations and their boards in order to kind of build an appetite for looking at this kind of a tool. Right now, for Propolis, all of the investments that we have collected or pledged so far have been from individual retail investors. So we have not, which is very exciting to see that level of community support. We would love to be able to bring some foundations on board as well, and we've had some conversations, but we haven't been able to take that step yet for our campaign.
Thank you, Lindsay. And Tim, does Barrie have a community foundation, and have you folks worked with any community foundation so far?
Yeah, thanks for the question. I appreciate it a lot. We do have a local community foundation here in Barrie, also in Aurelia, and also along Southern Georgian Bay with Collingwood and Owen Sound. And Redwood has actually worked quite closely with all the foundations. We get support from all the foundations on a regular basis, with our operations and grant funding. And we have had several conversations over the last few months about the focus of their investment portfolios, and also how that works around a community investment bond. One of the things that Redwood, I'll disclose to you guys right now, we actually haven't sold any bonds yet. This is our sort of initial introduction to our bonds out to the world, and they're not going to be available until the beginning of February. So we're all ready and prepared. There's just a few I's to dot and T's to cross, and we're ready to go. But the local community foundations are on board for discussions of what an investment would look like for them. So that is something that is in progress and is going to roll out and happen over the next few months in terms of conversation and discussion, and hopefully some pledge and some commitment. One of the things that we also do have is we do have impact loans, and we've done that for a few years. We have about 3.1 million in impact loans. They're not secured to anything, and it's very similar to what Indwell has done with theirs. And there is private investors in the community as well as municipal government. The city of Barrie has invested in impact loans with Redwood, and we currently are doing that with the city. And I think there's opportunity there for not just foundations, but other organizations to make these kinds of investments to impact their community, whether it's local municipal government and reserve funds, whether it's foundations that are community foundations, or whether it's even social organization foundations like Rotary clubs and stuff that have their own foundations as well. So there's a lot of opportunity for sort of that foundation or private investor and institutional investment to take place that makes really impactful investment in communities that really make a big change.
Perfect. Thank you so much, Tim. Thank you. So I'm going to try to pick another question. This is for Michael at the Ottawa Foundation, Ottawa Community Foundation. So Michael, how did you move your foundation from getting stuck on measuring success by rate of return plus COLA, and what other values do you use to measure success outside of interest rate? So a minute or two if you want to take on that.
Sure. I think it's a process that we're still doing, and we have just over 11% of our portfolio invested in impact investing right now. But I explained sort of that tension, right? Because typically a foundation that has an endowment, the more interest you can make, the more money you can grant to organizations in the community. So it's really looking at both of those things. What do we achieve from an impact point of view through an investment in a community bond for these projects that we're talking about today? What can we achieve, and how do we measure that vis-a-vis if we made maximum interest and then invested maximum interest back into the community? So we know that there's a mix there, and I think we're transitioning to more impact investing overall. But I think it's important to get the measurement of impact right so that you can make that analysis and make those decisions to move toward more impact investing.
Perfect. Thank you so much, Michael. And I can add my take on that from my foundation hats that I've worn, is thinking of a portfolio approach. And as I say, what are you benchmarking and comparing with? And deal by deal things can look iffy, but you have to think of a bond as a bond, in my opinion, and then take roll up. And also remembering, what's the purpose? Pension plans fiduciary duty is a bit different than a community foundation, that maximization of profit at one side, but what impact are we creating for the society and for the community? And and the portfolios I've run, and I've done it for almost 9-10 years, they've all actually met, or not on a long-term basis, not underperformed. Impact investing has not underperformed. There are blips, but so I'm looking at this here. I think we'll have someone join from CFC soon. But before that, quick question anyone wants to address while that's happening from, say, Mike or Nick, if you want to take it up, the sustainability. Business sustainability, how there was a question about the sustainability of this business or the fees charged. You want to comment on that before I give it back to Tracy? And if you could take like 45 seconds. Sorry.
You're asking me?
Yeah, Nicholas, you can.
Yeah, sorry. I think I already spoke to that. So I think the question was pertaining to cost for the investor to bring registered products. Am I understanding that correctly?
Yeah. So
I think so we haven't launched the bond yet. So based on what I understand now is that on the investor side, there are some costs for bringing a registered product such as a TFSA or an RRSP. It ranges from about $250 to $600, depending on the term that the investor would sign up for and the institution that the issuer would work with. And then on the issuer side, there are some legal costs for registering the security on title. And there might be some other kind of straggling invoices that perhaps I haven't seen yet. But there's some cost there, and there's some time there, and there's some legal counsel involved.
Fair enough.
But I think just the one thing that I wanted to express is the reason why we did investor consultations. The majority of the potential investors said, we don't really need the security backing. We have a lot of trust in you as an organization, as an institution. What we are trying to do is attract a different type of supporter with a different capacity and appetite for investment. And so if younger folks of a different investing capacity or even knowledge can bring their registered products and feel safer doing that, more secure, that's one of the hopes that we have in attracting a different type of supporter. And that's why we're offering the registered product.
Perfect. Thank you so much. So I think we've shared some good examples of securitization and business models, so folks can get in touch with people. With that, there were some good chats. I think a lot of us got answered. But if there are any follow-ups, please reach out to the speakers and to the CFC team, and we'll be happy to support. But there could never be enough time. So with that, I'll pass it back to Tracy, and thank you everyone from my perspective on joining and for the engaging discussion. Tracy.
Oh, MJ, thank you so much. And I want to share my deep gratitude for everyone for the sharing, the conversation, for the questions that came in. Some were from community foundations, some were community agencies that are doing fantastic work. And what you can see from what we've seen today is the importance of working together. That housing, as we look at housing, we look at social impact opportunities, how we look at impact investing. It is about being together as a community. And so on behalf of everyone that is with us today, I want to share my gratitude for each and every one of you for sharing your insight, your reflections today. Something that I'm leaving with as I think about the next steps. We know that community foundations that are with us are on the journey of either deep in impact investing, as we heard from Michael at our Ottawa Foundation. We also know that we have other foundations that are in this space of learning, in this space of exploring, in this space of the education, which Lindsay, you mentioned earlier today. And so we know there's importance to continue to do so. And as you'll see, that's noted in the chat, we've added one of our resource tools, and it's an impact investing guide that was created back in 2019, specifically to look at how we can do things differently. When we continue to update our resource library with additional tools and resources that will support either our community foundations or those fantastic groups that are working within communities to partner with each of you and with others. Something that I'm holding on to is the intersection of the needs. That as we continue to focus on housing, the intersection with all the other various parts of community, and we all have a responsibility to strengthen community. We all have a responsibility to continue to increase that sense of belonging, because we know when we do so, our communities are stronger and people flourish. If it's that little one in kindergarten that has security of a home and now also has the security of food in their bellies, or if it's that senior that has worked hard for the community, we know the impact is there. So as we leave today's session, I really encourage each and every one to continue to engage in partnerships, to continue and engage with your stakeholders, because as we continue to navigate the housing issues and the various other issues that we face in our communities, we know the importance of being together. So on behalf of everyone, again, I want to say huge thank you to everyone for what you've contributed to today's discussion. Please don't stop now. Please continue this discussion. There's been emails that have been shared in the chat. We know there'll be further outreach to the various members that have presented with us today, and there'll be various conversations that'll take place in communities from coast to coast to coast as a result. Also just want to share with you that not only is housing an area of concern, of critical concern, but we also have had the conversations around volunteerism and what's taking place within volunteerism within our nation. We are holding our next event on February 7th, and the topic is embracing the future and the trends in volunteerism. This is an important topic. As we heard today, we have various not-for-profit members with us. We know the importance of contributing to community, and so this topic is one that we encourage each of you to join us for the upcoming session. And continue to watch our events page and our resource page for additional events and resources to support you as you continue to navigate and explore and look at innovative ways that you can continue to strengthen community. Thank you to all. Please stay well, and we'll look forward to seeing you at our next event. Thank you.